Tesla hits the accelerator on its electric dreams as the car maker delivers a record 200,000 cars to customers in the second quarter of the year. German fears about Spain's spike in COVID infections means yet more uncertainty for European travellers. Hello there, very warm welcome to World Business Report. I'm Ben Boulos. Let's start with Tesla because the electric car maker has shown no signs of being hit by the pandemic blues. Tesla reported its sales rose to $12 billion for the first 3 months, for the second 3 months of the year. That takes them up to the end of June. And that figure is up from $6 billion just a year ago. Now, despite shortages of semiconductor chips and congestion at ports hampering production, the firm delivered a record number, 200,000 cars to customers in that quarter. However, the firm made a $23 million loss on its Bitcoin investments, although it recently signaled it might accept it again as a payment in future. Daniel Ives is the managing director of Wedbush Securities, and I asked him what he made of the results.
This was a strong quarter, especially when you think about the chip shortage. I mean, the 200,000 deliveries and also the more profitability that we're starting to see. That's really the key here. It shows in this green tidal wave that Tesla's leading the charge, despite some stumbles they saw in China this quarter.
It's interesting. You mentioned China. That is such an important market for all car makers, but especially those in the electric vehicles sector. Did we get much detail on that from this set of results?
Yeah, and for Tesla, that's the hearts and lungs, really, of the bull thesis and the growth story. You know, I think Elon talked about China, looks to be strong second half of the year. I think there was definitely optimism on the call, and I think that's something investors, when the stock sort of digests this, it's really about the China growth story continuing to play out. That's the key to Tesla, and ultimately I think that was a bit of a feather in the cap for Musk looking forward in terms of China.
Daniel, something we talk about quite a lot on the business programs is the shortage of semiconductors, those essential chips that we use in everything from smartphones and tablets, but also in cars that need those onboard computers now to function. Did we learn anything about how that's having an impact on Tesla, if at all?
Yeah, and that's been an overhang not just on Tesla, but of course, as you talked about the whole auto sector. I think we're seeing some moderation of the chip shortage, which is a positive. But look, if you look right now, Tesla, every car they're making, they sold in the first half of the year. This is a supply issue rather than any sort of demand issue. That becomes a high-class problem, but now it comes down to second half. They really need to start to see some of that alleviate to hit some of those target numbers.
And it's quite interesting, the loss they made on the cryptocurrency Bitcoin, the investments they made, because Tesla is such a key, I suppose, a combination of a car maker and a tech company. When it bought Bitcoin, hinted that it might accept it as payment for its cars and trucks, we saw a surge in the price of Bitcoin. Now it seems to have backtracked from that a little, especially considering the losses they've endured.
Yeah, when you go back, I mean, at one point, they made more in Bitcoin on a paper gain than from selling all electric vehicles last year. So there's been a U-turn there in terms of Bitcoin, a $23 million write-down impairment, I think less than the street was expecting. But ultimately, this has become a sideshow for Tesla, and it's been a bit of an overhang in the stock. I think investors are looking forward to them sort of playing that down a bit and focus on electric vehicles, because that, especially with competition across the board, that's the key of the Tesla story.
Daniel Ives there. Well, you know what they say, two Dans are better than one. Joining me now, Dan Kemp, who is the Chief Investment Officer of Morningstar Investment Management. Good to see you, Dan. We saw those results for Tesla. What do investors make of the developments on the electric vehicles front, do you think, from what we've seen?
Well, good morning, Ben. You're absolutely right. There's so much for investors to chew over in those Tesla results and other results we have coming up over the next few weeks. But I think it's really important from an investment perspective to separate the growth story that we've just been hearing about from the valuation of these electric vehicle companies. Because, of course, it's perfectly possible to turn a great asset, a growing business, into a terrible investment by paying too much. Typically, investors tend to overestimate the change that we'll see either at a company level or an industry level over the next 2 years and underestimate what's going to happen over the next 10 years. And that can lead to very wide gyrations in the prices. People become over optimistic and then over pessimistic, and we've seen that in the electrical vehicle market over the last year. And it's so important to keep a steady head, think about what the story means, but more importantly, how much you're paying for that story, whether it's Tesla, electric vehicles, or any other investment.
One of the other interesting things we learned was that $23 million loss that Tesla made on its investments in Bitcoin. But Bitcoin's been on a bit of a roller coaster this week, and it's not just because of Tesla. There have been other firms that have been having an effect as well. Tell us more about that.
That's exactly right. So again, we're seeing a similar dynamic play out in Bitcoin as we are in the technology sector in the US and electric vehicle sector, where people are getting very enthusiastic about the future of this technology and the growth we're seeing in potential adoption, but maybe aren't paying as much attention to the price that people are paying for those assets. And so we're seeing these wild gyrations. We saw a very strong run up in cryptocurrency prices earlier in the year, then a sharp crash, and then just over the last couple of days, we've seen speculation about Amazon getting involved in cryptocurrency, which again has led to some enthusiasm, and then there's been another announcement from Amazon which has led to that waning. And again, it's so important to understand that if you can't identify a fair value for an asset, what it's really worth, which typically comes from looking at what the future returns from an asset will be, whether it's dividends or interest, then it's very difficult to set a realistic price. And that's when you get these extreme gyrations. So just be careful of thinking about what the real value of any asset is worth, not just what the current price is.
OK, Dan Kemp from Morningstar Investment Management, thanks very much indeed for your analysis. The UK government will this week consider loosening travel restrictions for travellers from the EU and the US. Any such move would, of course, be a boost to the troubled tourism sector and help to reopen the UK to mass foreign travel. The FT, the Financial Times, is reporting that ministers are separately looking at removing France from that newly created Amber Plus category, which forces travellers from the UK, if they go to France, to quarantine on their return. Meanwhile, Germany has listed Spain as a high incidence area due to concerns about a spike in COVID infections. So travellers arriving back into Germany who aren't fully vaccinated will have to quarantine. Here's Eric Dressen, the Secretary General of the European Travel Agents and Tour Operators Associations, on Germany's decision.
This is a sad decision, if I may say like that. There's already about 250,000 German people in Spain today. So first of all, this is a key issue for them to consider how they can travel back. Now, of course, you have a lot of people who planned their holidays for Spain, and for sure there will be changes in their plan. Maybe not massively, depending, of course, if they are fully vaccinated, but for sure many people will reconsider their destination.
Eric Dressen there. Let's take a look at some of the other main business news around, and the property website Zoopla says that surging demand for UK houses will last well into 2022 as buyers continue to look for more room after being cooped up during the pandemic. A search for space has pushed up the average price of a house by 7.3% over the past year, reaching a new average high of £230,000. The department store chain Selfridges Group has been put up for sale by Canada's Western family for £4 billion. This is according to several media reports. Credit Suisse has been appointed to start looking for a buyer. Selfridges cut 450 jobs a year ago after sales slumped during England's nationwide lockdown. Jeff Bezos has offered to cover $2 billion worth of NASA costs in order to be reconsidered for a key contract to build a moon landing vehicle. In April, the space agency awarded the $2.9 billion contract to Elon Musk, rejecting a bid from Bezos' company, Blue Origin. Right, let's take a look at how the markets are doing. A mixed picture on the Asian markets in the Tuesday session. The Tokyo Nikkei up a bit, but heavy losses on Hong Kong's Hang Seng. Confidence at a bit of a premium after the previous day's sell-off. Investors keeping a wary eye on China after that crackdown we've seen on a range of industries there. That's where we'll leave World Business Report. Thanks for watching. I'll see you again very soon. Bye-bye.